to the Trading Market Technicals morning call video for Monday, December the 3rd. First day of the week, first day of the month, and it will be interesting to see how this month develops, getting closer and closer into the Christmas holiday. As you know, seasonality, we are into some strength. We should, at one point, if not already, start some sort of a Santa Claus rally. That does not have to happen, but if history repeats itself, we should get a nice rally going into the end of the year and first 2 weeks of January, and then we would need to basically reevaluate and see where we go from there. Fiscal cliff is upon us, as you know. Year end is happening. A lot of talk over the weekend with both sides, both parties still blaming each other. Nothing really has been getting done. So I think that there'll be some sort of resolution. I would hope by the year end. Otherwise, the market would take probably a big hit, and then we'll see where we go from there. Quick recap of last week. As you can see, with green across the board, very, very slow trading. We popped up one day, consolidate for two. I'll show you the charts in a moment. But as you can see here, a lot of sectors did well except the banks and the financials. They had a down week. If you run down to the commodity sector, precious metals had a red week. I do think that they're creating a big base. May have been a couple of weeks ago when I mentioned about the GDX. They fell apart with the market falling apart before the market actually rallied. However, I do think they're creating a bigger base for a bigger move, probably an extension of the bull market that gold's been in. So we'll see. Be interesting to see what happens and how it's developing the last couple of days. Seasonality, we are into some seasonal strength in gold. So that would actually be a good plus for the GDX, the gold mining index. So we'll keep an eye on this, and there's going to be a big trade in this in the coming days and weeks. Copper, nice big update, 3.2%. Risk on, so that's good to show that the bulls are in sync with what copper's doing. And let's take a look at our performance chart. And as you can see here, sectors. Take a look at the sectors. As you can see here, utilities were up. They've been really battered, basically on the new tax laws coming in January. So people getting rid of their utilities. But we had a big move in utilities, service conglomerates, technologies up. So everything up except the basic materials. Which what you want to see is basic materials actually running with the market itself. So if you take a look at our indices, and you can see gold down here. Gold down big, oil up, and then of course the Russell, which was a nice big move up. Russell has been on fire lately and quite extended, but again, can't fight the trend. And as they say, the trend is your friend, so something really to keep an eye on for any type of reversal. But as you can see here, pretty good green across the board. Take a look at our econ data now. As you can see here, ISM index, construction spending, auto and truck sales. So that's going to be something to look at for the ISM index. That's something that this index gets a good notification and it's closely watched here. So something to keep an eye on here. Prior 51.7, and then as you get down here, you can see the non-farm payrolls is going to be a big driver on Friday. That is always a big driver and usually sets the tone for the month. So let's keep an eye on non-farm payrolls come on Friday. Of course, initial jobless claims, and then of course we have the ISM services, the factory orders on the 5th. So that's also a big number. All right, so let's roll into the charts. Let's see where we are. I've looked at probably 1,000 charts over the weekend. And I'm still suspicious of a pullback. I hate to say it, but it looks, some of the indicators that we do follow, and I'll show them to you. I showed them last week. Just tells me that that we're looking for one more dip. I'm looking for one more dip lower before we actually get into that Santa Claus rally. Now, obviously, news trumps the charts. Anything can happen. So just please be aware of that. We could rally hard from here and right into the end of the year. That can happen. But I do think, and I'll get into the S&P in a minute, 1425, 1430, I mentioned last week, is probably going to be probably an important high. And that will probably bring in a lot of sellers in the S&P. But we'll get into that in a moment. Let's take a look at our NYMO. As you can see, we're reaching overbought territory here, right into that 60 area. We're not quite there yet, so there is more room to run to the upside. So if we do get one more big push up into that 1425, 1430, that'll probably put us right into that 70 percentile area. And that'll give us an overbought reading and probably break out of that Bollinger Band. And as you can see here, this is basically that area right here on the S&P. So that's something that we want to really keep an eye on. And as I brought this up last week, the NASDAQ record high percentage index, As you can see, case in point, we always get that one more dip 2-3 weeks later. Starting to turn, we're in that lofty area again. Now, it does not have to happen. Please remember that. But this is just giving me just a heads-up warning that maybe we might be into might get one more dip lower, which would be fantastic for the Santa Claus rally if that did exist this year. Stocks above the 50-day moving average. As you can see, again, in this area here, this is known to really get a top and or a bottom in place. As you can see here, we've bottomed, and of course up in here, topped up in here. So we're getting to that area. There's still more room to run up in here. So again, this would not surprise me to have a run up to the 1425, 1430 in the S&P, SPX, and then kind of stall out and then kind of sell off again one more time. So that's something that I'm watching. VIX at its lows, as you can see, back into the base pattern here. So VIX at its lows. A lot of sectors are at resistance right now. So this is why what's kind of concerning me. As you can see here, the U.S. dollar, again, still on this above this trend line basin. So this is actually a good sign for the U.S. dollar bulls. Obviously, that would be a bad sign for commodities and equities. So this area here holding nicely. So this is something that's a little concerning. And let's take a look at our NASI, our weekly summation index. Now, went on a buy signal 2 weeks ago. Actually, last week, I apologize. The first week that goes up, we had the cross. We follow through with a big gap up. So this is on a buy signal. Now, this could whipsaw a little bit like here, but this right now is on the buy signal. So that's a good sign. So even if we sold off a little bit back into here, it would take a lot to have this trending moving average come back down again. So as of right now, this is in a buy signal. Probably will even stay that way, even if we dip lower. Okay, so that's a good sign. So now let's take a look, just give you an idea of what happened here. As you can see here, 5-minute spider chart, 2-day consolidation inside day. So really, we need to take out 142.51 if you're following the spiders. 142.51 would give us more push to the upside, more momentum. Again, new buy orders come in as they can see that we have inside days which has been broken out. So we've consolidated for 2 days. Really not much happened on Friday. And as you can see here, we consolidated for 3, 1 push up, and a 2-day consolidation. So very quiet last week. Very quiet. You had to really dig in deep to try to find some good plays last week. But as you can see here, again, 142.51. Write that down. That would be your area of further movement to the upside. Now, if we would break 142, 141.50, then obviously we'd be into this channel again. Only a break below that 138.99 would really give us concern that we're really moving lower. Okay, so we do have a large base here of 5-point move in the S&P. Down here, a break below this area, 140, obviously would get us concerned, and a break below 138 would get us a trend change, at least for the short term. And that's the spiders. Let's take a look at our weekly chart in the S&P, and as you can see here, nice big move off of that long-term trend line, and we have 2. But as you can see here, we're really trying hard to move over, but you see RSI at the 50 area, and MACD still have not crossed over yet. So a little concerning on the weekly, but a good trend reversal here off that long-term trend line on the weekly chart of the SPX. Daily chart, again, 142, 1424, 1430 area. As you can see here, big volume profiles, and that would get us right back up into that area. 61.8% retracement from the top comes in at the 1424 anyway. So this is on the reverse side. If I did the reversal of the MACDs, and if I take this out here, of the Fibonacci retracement, and I run here, that'll get me right up in here. And as you can see here, that comes in at the 61.8% retracement. So now that we're headed back up, we'll want to do the reverse, and that would get us right into that 61.8% retracement of 1424. And that's why that's going to be a heavy area. Plus, we have this horizontal area of resistance. Plus, we have the 50-day moving average. So, to me, I think settles will step back in here. Now, if we do break above that, then obviously we would probably retest the highs here. But just really keep that in mind if you're watching the S&P cash, the SPX. Okay, same thing with the spiders. If I took this and I reversed that, it would be the same thing. Take the Fibonacci retracements, come in here, and you get the same move right up in this area. 61.8%, 143.25, call it, and then of course your 50-day in red is right underneath it. So consolidating for 2 days. We're going to need to see what happens. This is going to be very interesting this week to see where this market goes. I do see a further pullback, but again, with the fiscal cliff issue, the market's getting pulled by the Republicans and the Democrats' statements. So that's why we really need to keep our stops in place here. All right. We still have a 30-minute S&P spiders. As you can see, there's two things that I want to show you. One, we have the spiders, and we have our inverted head and shoulders. Our target area would be 145.25, and that still remains the same. Even if we dip lower, that would still be in play. Now, what I want to show you is the Bollinger Bands. And when you get a Bollinger Band that pinches this tight, that means that energy is building in the markets. And I do believe there's going to be a big move one way or the other. Now, the Bollinger Bands obviously doesn't state which way the move is going to happen. So we don't know that. We just take our analysis and we apply it, and then we let the market break in that direction and then make it trigger. So obviously, like I mentioned, the 142 and change area, or that 140 area right up in here. Where are we? Right here, 140. Right in this area here, a break low would really send us much lower to that 138 and change. But when the Bollinger Bands start to pinch and start to tighten, that tells you that energy is building and the market is going to break one way or the other. Again, it doesn't tell you the direction, but it just tells you to be on alert that this market will start to move one way or the other. So good sign. And I like using a 30-minute chart on the Bollinger Bands. You can even use a 15-minute as well. But this is something that I always love to gauge when I'm watching when I'm reading the charts here. Okay, this 30-minute diamonds, as you can see here, a little bit wider on a daily chart, but 2-day inside day above the 200-day, excuse me. So we're consolidating here. Again, bullish that we've held, but now it's going to need to prove itself. The bulls have to prove itself, saying that we're actually headed higher. But again, overhead resistance here, so just keep that in mind as well. IWM's big move up, gap here, and the big gap up. Held the gap on lower volume here on Friday. But now, again, above the 50-day moving average. This is fantastic if you're a bull. However, I do think this needs a rest. So a move lower, at least maybe into that 200, holding that 80 area, 80-ish area between the 20 and the 200-day moving average, would literally hold, consolidate, and then move back up again, would get this market moving higher as well. Again, but a great hold on the IWMs. XLF, as you notice, with the banks and financials, did have a lower week. But again, consolidating just underneath the 50-day moving average. We really need to see this start to move and break above this long-term trend line. Take a look at Apple here. Now, Apple, I mentioned that it might be carving out a big head and shoulders pattern. So here's our Apple, and I drew this line here last week. So we had a couple of up days. We're still above that 20. And as I mentioned, if you're long Apple, I would stay long Apple for now and let it prove itself as well. There's a couple of things that I mentioned last week, and I said, you know, everybody, a lot of these larger firms are coming out with their special dividend. If Apple were to do that, I think all bets would be off to the downside, and Apple would rally and rip to the upside and take this market higher. So I would imagine that, now, I don't know if that's going to happen. You know, tech, usually they don't like paying dividends, as you know Apple did and is paying one now. So maybe they come out with a special dividend before year end and really rip this market higher. So that's what I would be expecting for. And if that was the case, then I would see 620, 630 really right up in that neckline of the 650 area, and then see we really need to reevaluate it. But again, that's probably one I'm looking for is an Apple special dividend. So we'll see what happens. But again, constructive. We're sandwiched between the 200 and the 50 and the 20-day. Excuse me. Up above here we have the 50 and of course that long-term trend line. So we want to really see what happens. We need to take out that 200-day at 600. 600 would be the spot. And if we took out 600, then I think we'd test the 618 to 620 area, and then of course reevaluate. And if you're long, you're going to really need your stops going to be below that 20-day to really make this position work for you. Okay. Lastly, the Qs. Weekly, as you can see, nice move off of that long-term trend line. We did get validation from the our volume. Volume was higher from the previous week. And again, MACDs are starting. The histograms are starting to make a higher low, but the regular MACD actually really has a lot more work to do to turn higher. And then we'll look at our daily chart. And the daily chart here again sandwiched between that 50 and the 200-day moving average. All right, guys, interesting week. Let's keep an eye on what happened comes out of Congress, and of course we want to make sure that all our stops are in place here. It's going to be an interesting week to see if this market can get up to that 1424, 1430ish area, and then again we would need to reevaluate and see where we go from there. But I'm a suspect for one move lower, and then of course a year-end rally. Now again, remember that does not have to happen, but let's let the markets prove which way it wants to go, and then we would really follow that trend and move higher going into year end. Be interesting to see what happens this week. All right, guys, have a great week, and we'll talk to you tomorrow.